they've seen the uptick in people seizing tax residency. However, they are not accounting for tax. So there is a specific target for high net worth taxpayers. But across board, I think SARS is very cognizant of what's declared. I mean, they've gone to the extent of now, going to people's bank accounts where they don't declare. I mean, I've seen it in practice as well, where clients do not account for what's due to SARS, and SARS has taken it into their own hands, and now they dip into their bank accounts to receive what's due to them.
A very warm welcome to everyone who has joined in. As always, we appreciate your support. We appreciate our listeners. And again, another exciting topic. Needless to say, the budget speech, always interesting. But I am sitting with someone who really enjoys tax and here to give us a bit more insight into what one specific amendment means for those non tax residents and expats. Mbali is our team lead for Expatriate Tax here. And I'm very excited to hear what you have to say on this topic.
Thank you, John Paul, and thank you for everyone for joining in. Yeah, so 2026, the budget speech has, been complete, and needless to say, there wasn't much drama, but there was an unexpected change. That specifically being the donations tax. Very, very weird. I must say, I wasn't expecting that, but we do see that government, together with SARS, are strategically working together to ensure that they take all the tax that's due to them.
Mm, couldn't agree more. So I think maybe for those who missed the budget speech and have been waiting with bated breath to know what it affects on their side, I know the amendment we're referring to is regarding that donations between spouses. So I know the previous position was donations between spouses, whether they are tax resident or not, was
Yes,
exempt.
correct.
And at this stage, what has been proposed as
Yeah.
the amendment?
So we do see that, they did make notice that people were abusing that, especially for those who cease tax residency as well. It wouldn't account necessarily for, tax that needs to be accounted for in terms of Section 9H. Now, in terms of the Section 56 of the Income Tax Act, we do see that they did propose a limitation to this exemption. Basically, what this means is that donations tax would only be applicable to those who are still tax residents. So, for example, if you and your spouse are still tax resident, you have, full rights to the exemption. However, there would be a limitation as soon as one is non-resident and one remains tax resident.
And interesting because it's not very common that there is an amendment that deals with the same kind of scenario,
Yeah,
but based on your tax status, your
yeah.
your taxable income or your tax would be differently regulated. So I think in terms of this proposal, maybe explain or elaborate exactly how did this benefit those one tax resident and one non-tax resident spouses who were making use of these donations.
Sure. So what we do see is that obviously when one ceases tax residency, there is Section 9H exit tax that needs to be accounted for. So what they have picked up is that with those high earning taxpayers, they would abuse this by ensuring that they avoid exit tax that needs to be paid by, transferring or donating to the spouse who's already a non-resident, which essentially would limit the exit tax that they would have to pay. Because remember, with exit tax, or rather these donations, they're not limited to only funds. They can expand to even assets. So they did see that there was an abuse of this and therefore introduced this limitation.
Very interesting. And as you said, no controversy for expats this time around, except for the one topic that, if I can say, a limitation on donations between
Yeah,
spouses, one
correct.
being a non-resident, one being a resident.
Yeah,
So I know the current stance and why, we'll get to why this is important, but the current stance or previously was that donations between spouses were fully exempt.
correct.
I know that this amendment affects spouses, but specifically where there is one non-tax resident. Maybe you can just elaborate exactly on what the amendment is going
Yeah.
to be.
No, I think this is one that was not expected, especially because, one wouldn't necessarily look at this. But I think, again, SARS in their efforts to make sure that they collect all the tax, especially from departing taxpayers, they've then focused solely on donations tax, which, as you mentioned, it was exempt, so meaning you could transfer or rather donate to your spouse without any tax. However, they did see an uptick, especially with those high net worth taxpayers, to ensure that, when they do depart, they do, take portion and rather pay for what's due,
Mm.
which is exit tax.
100%. And I think a good point to lead on from there is exactly that exit tax. I know SARS in their budget review used the words, this was a mechanism that was used to avoid
Avoid. Yeah,
tax. Yeah. So tax avoidance, obviously, you're welcome to for as long as the law allows you to.
correct.
And this is obviously an area that SARS has seen that there's a lot of money or leakage of recovering tax on these kind of scenarios. So I think in terms of that, to think about where would the tax be coming from if it's different between resident spouses, a
Yeah.
non-tax resident spouse, and a resident spouse. And exit tax is what you mentioned there, and completely agree. Maybe you can just cover for those listeners that are not sure what an exit tax is
Yeah.
and what it entails, and then they'll have clarity on why this is so important.
100%. So, in terms of exit tax, so when one ceases tax residency, they need to declare all assets. So, what they have seen is that some clients, or rather taxpayers, would avoid exit tax by making sure that they transfer to their spouse who has already seized, so that they limit or rather reduce the exit tax that they would have to pay. So, for tax residents, they're not exposed to exit tax, but it specifically speaks to those who are planning to cease tax residency. That's why they now decided that they will limit the donations tax for those who are, they will rather restrict it so that it's only applicable to those who are seizing tax residency.
And I think you can see the value in it when one spouse has ceased tax residency and not paid much exit tax.
Yes,
And then the spouse who owns most of the assets or funds and that type of
100%.
thing, then donates it to the non-resident spouse and then ceases. And then there's no real exit tax on theirs
Yeah,
either. So very interesting mechanism. Yeah, interesting that SARS picked that up. Obviously, then shows that they are watching their stats and
yeah,
specifically watching what happens with non-residents and expats. So again, just a caution for those who are embarking on that process. But I think in terms of just real life and what you experience on the ground, in terms of consulting with leads and clients, and I know there's plenty of them, is this something that you often came across that was
yeah.
sought to do?
So interesting. It's the other way around. So you see spouses donate to those who are still residents in South Africa. But however, I must raise that it is a concern when you do consult, especially with those high net worth taxpayers, that they are very cognizant and sometimes delay the process of seizing their tax residency, specifically because of exit tax. That's where then you would see other spouses introduce or rather plan on a staggered cessation. It's called a staggered cessation, where one would then seize a tax residency. And as you mentioned, the spouse that's still resident would then donate, which essentially abuses the donations exemption.
Spot on. So yeah, very interesting that obviously there's a group of a specific class or high net worth
Mm,
individuals that are looking to do this. And I mean, what are your thoughts on my side? I've seen a lot of focus on high net worth individuals recently,
100%.
specifically those expats and those leaving South Africa. So I think is that true, or is this some kind of maybe hypothesis I have in my mind? I'm not sure if you've
Yeah.
noticed the same.
I think over the years, and SARS is very strategic. They've noticed that they're not getting the tax that's due to them. Especially, they've seen the uptick in people seizing tax residency. However, they are not accounting for tax. So there is a specific target for high net worth taxpayers. But across board, I think SARS is very cognizant of what's declared. I mean, they've gone to the extent of now, going to people's bank accounts where they don't declare. I mean, I've seen it in practice as well, where clients do not account for what's due to SARS, and SARS has taken it into their own hands, and now they dip into their bank accounts to receive what's due to them.
So I think in line with this as well, I mean, we've seen a lot of amendments that took place last year. relating to expats.
Yeah.
Changes on the notice of non-tax status letters,
Mm.
tax return filings, non-resident and resident now. So definitely a focus on expats, and NSR is wanting to close loopholes. So for those who are looking to embark on a process like this too, in other words, cease tax residency, which is the diligent thing to do, um, how should you go about this process in terms of an exit tax that you've mentioned?
Yeah, I think a great starting point is obviously reaching out to someone who's an expert in this area. A lot of people think it's just the ticking of a box or just leaving and obtaining the letter, like you mentioned. But there's so much planning, especially where one has a lot of assets. We need to plan around the assets that you still intend to keep in South Africa, those that you're trying to transfer. Also, take into consideration, exchange control. There's also been a change as of last year. We do see SARS, being very strict as well as the Reserve Bank with transfers as well that are leaving South Africa. So one, I would say definitely getting in touch with an expert to plan properly, ensuring that you're compliant and just being honest. I think a lot of people try to be dishonest just to avoid Section 9H, which is the exit tax. But the sooner you get to it, the better, so that you're not hit with surprises in the future. Yeah, so those are my thoughts and what I see in practice.
And I think maybe for those who are wanting to donate, I know a change, I think you mentioned that came into effect last year or
Yeah,
beginning of this year,
yeah,
can't
beginning.
recall,
Yeah.
is that donations tax requires certain regulatory approvals now.
Yeah.
Maybe I think that's another one for those who do want to do it correctly now and
Yes.
maybe don't have a choice anymore,
Yeah.
but to have to do it. So, yeah, tell us
Yeah.
maybe about that, which ties in very well with this.
Yeah. So I think a point of importance is that if you're planning to see tax residency, a staggered cessation is not ideal, especially because now government as well as national treasury have a close eye to these transfers. So it's best to do it when you still tax residents, so that you can still make use of the exemption because it's still applicable. The only time it's limited is when now one ceases tax residency. So stagger cessation, not ideal. It is best to do the process together with your spouse. Again, when you see tax residency, well, depending on the qualifying basis, but specifically with ordinarily residents, the intention has to match. So your spouse should also leave with you. Therefore, a staggered cessation would not be ideal.
So now that we've covered obviously this amendment, which is very important for those expats and well, expat and one still tax resident. But what are some of the other considerations that may be critical for those who are looking to cease tax residency and has a spouse who's a tax resident or both ceasing? What are the general principles that you have to, the needs and knows, in other words?
Yeah, so I think in addition to the new donations tax, one needs to make sure that they are compliant because non-compliance can be a hurdle, especially when you're now trying to have a seamless process. Also, bank accounts, very important to take into consideration that if you do have a South African bank account, that will need to be converted. Previously known as the block account, but it would need to be converted to an unraised bank account. And there's for those who are trying to transfer funds outside of South Africa, very important to note that the exemption or the SDA, which has now been bumped up to 2 million, is not applicable. So if one is trying to move funds as a non-resident, very, very important to know that you need to apply for the approval international transfer PIN, literally for every transfer. And I think lastly, it's just making sure that even when you're non-resident, you need to still file. A lot of people have the misconception of being non-resident means you have deregistered. That is not the case. When you have ceased tax residency, and now your status has been converted to non-resident, all it means is that you still maintain your SARS tax number, which still allows you to participate in the South African economy. You still have an onus as a taxpayer to file your annual tax returns. So yeah,
Perfect. Thank you very much, Mbali. I know that this was a very interesting topic in terms of the budget speech and something that those in South Africa and those already who have ceased
yeah.
they need to pay attention to it and slowly watch how SARS is progressing in terms of oversight and financial surveillance when it comes to these kinds of scenarios. I
100%.
do know that you wrote a very insightful and incredible article on the topic.
Yeah.
So I think, yeah, maybe just for those listeners who found this interesting and would like to listen to more or read more, if I could say, please do give that article a read. If there was one thing that you maybe could summarize this amendment for from your article and from this
Mhm.
podcast for those, just to end off, well,
Yeah. I think for those who are planning to see tax residency, it is very, very important to cover all the bases, especially the way SARS and National Treasury is moving. It's very important to ensure that you get it right the first time. You don't want to be seen as avoiding tax. You rather, or evading tax. Rather, you just want to make sure that you are compliant and you are up to rest in terms of what's required as a taxpayer.
thank you so much for that, Mbali. Again, for those who are looking into this topic, please do reach out. As you can hear, Mbali is an expert in the area. So do yourself a favor and contact us when you're ready. But for now, thank you very much for listening. Again,
Thank
always
you.
appreciate it. Please do continue, and we appreciate your support.
Thank you. Thanks, everyone.